A woman named Diane in Naperville, Illinois, retired in 2021 after 31 years as a school librarian. She did everything right. She paid off her house. She maxed out her 403b. She even hired an accountant the year before she retired to make sure her ducks were in a row. And for 3 full years, Diane overpaid her property taxes by $2,147 every single year. Not because she made a mistake, because nobody at the county, nobody at her bank, and nobody at her accountant's office told her she qualified for a senior homestead exemption that would have frozen her assessed value the year she turned 65. The form was 2 pages. It was free. It had been available on the Cook County Assessor's website the entire decade before she retired. She found out about it from a comment on a YouTube video. By then, she had thrown away $6,141. Nobody told her. That story is not unusual. It is the norm. And today I'm going to walk you through the 4 states where retirees are quietly hemorrhaging money they already earned, already saved, and already paid taxes on, because the system that collects from you was never designed to inform you. Now, before we go any further, I am not a CPA. I am not a licensed financial advisor. Nothing in this video is personal tax advice. What this is publicly available information that I've pulled directly from state revenue departments, county assessor offices, and IRS publications. You should verify everything I share today with a qualified professional in your state. Good. Let's get into it. Number 1, Illinois. Illinois does not tax Social Security income. Most retirees hear that and assume they're in good shape. That assumption costs the average retired homeowner in Illinois approximately $4,179 over a 3-year period. Here is why. Illinois has some of the highest effective property tax rates in the entire country. The statewide average is 2.07%. In DuPage County, it's closer to 2.4%. And buried inside the property tax code is a provision called the Senior Citizens Homestead Exemption, which reduces your home's equalized assessed value by $8,000. There is also a Senior Citizens Assessment Freeze, which locks your assessed value in place as long as your household income stays below $65,000. You have to apply for both. They do not stack automatically. And here's what makes this a system failure. The county assessor has your name, your age, your property record, and your mailing address. They have never once sent you a letter. Not when you bought the home. Not when you turned 65. Not when you paid off the mortgage. Never. They will, however, send you a bill every single year without fail. If you own a home in Illinois and you are over 65, go to your county assessor's website this week. Search for Form PTAX-324 and Form PTAX-340. Fill them out. Mail them. That is a $1,093 per year correction sitting in your mailbox right now. Before I get to number 2, I need to tell you something the original version of this advice always leaves out. These exemptions are not retroactive in most counties. If you missed 3 years, you missed 3 years. That money is gone. The system does not owe you a refund for its own silence. That is why the timing matters. Not next month. Not next tax season. This week. Number 2, Texas. Texas has no state income tax. Retirees move there specifically because of that fact. And then they get hit with a property tax rate that averages 1.68% statewide, but runs as high as 2.3% in Harris County. A home assessed at $310,000 in the Houston suburbs generates a property tax bill of roughly $7,130 a year. That is not a typo. Now here is what most retirees in Texas do not realize. The moment you turn 65, you become eligible for an additional $10,000 homestead exemption on top of the standard $100,000 exemption for school district taxes. You also become eligible for a tax ceiling. That means your school district taxes freeze at the amount you owed the year you turned 65. They cannot go up. Not ever. Not even if your home doubles in value. But you have to file. The form is called the Over-65 Homestead Exemption application, and it is filed with your county appraisal district. In most Texas counties, the deadline is April 30th. Miss it, and you wait an entire year. For a retiree on a fixed income with a $310,000 home, the difference between having this exemption and not having it is approximately $1,860 a year. Over a 10-year retirement, that is $18,600 that simply vanished because a form was never filed. Go to your county appraisal district's website today. The application takes 11 minutes. Number 3, New Jersey. I almost didn't include New Jersey because the situation there is so severe it deserves its own video. But here's the short version. New Jersey has the highest effective property tax rate in the United States at 2.23% on average. In Bergen County, the effective rate exceeds 2.5%. The median property tax bill in New Jersey is $9,527 a year. That is more than some retirees pay for health insurance. Now, New Jersey offers 2 programs that most retirees have never heard of, or heard of and assumed they didn't qualify for. The first is the Senior Freeze Program, officially called the Property Tax Reimbursement Program. If you are 65 or older and your annual income is below $163,050, you may be eligible to have the state reimburse you for property tax increases above your base year amount. The second is the Anchor Program, which replaced the old homestead benefit. For 2023, homeowners with income up to $250,000 could receive a benefit of $1,150. You apply through the New Jersey Division of Taxation's website or by calling their automated line. The filing deadline for the Senior Freeze is typically October 31st. The Anchor application deadline varies by year. For the most recent cycle, it was December 29, 2023. Between these two programs, a qualifying retiree in New Jersey can recover between $1,250 and $3,200 a year. The average retiree who misses both programs overpays by roughly $2,100 annually. That is money the state already budgeted to give back to you. They just didn't knock on your door to say so. Now I need to stop here for a moment because there is a pattern developing, and I want you to see it clearly. Every state we've talked about so far collects property taxes through a system that knows exactly who you are, how old you are, and what you owe. These same systems have the ability to flag accounts that qualify for exemptions. Some states have even built the software to do it. But the default setting is silence. The burden is placed entirely on you, the taxpayer, to discover, apply for, and renew benefits that you have already earned. Meanwhile, the IRS operates on the same principle. Publication 554, the Tax Guide for Seniors, is 37 pages long. It contains information on the extra standard deduction for filers over 65, which is $1,950 for single filers and $1,350 per person for married filing jointly in 2024. That one checkbox on your 1040 is worth real money, but the IRS does not highlight it. They do not send you a reminder when you turn 65. They publish it in a document that almost no one reads and call that sufficient. The gap between what you're owed and what you receive is not an accident. It is a design choice. Before I get to number 4, I need to tell you something else the standard advice skips. Some retirees hear about property tax exemptions and decide to restructure their home ownership, putting the house into a trust or transferring it to an adult child to protect it. In many states, that transfer resets your assessed value and disqualifies you from the senior exemption entirely. You avoided a $4,000 a year problem and created a $22,000 reassessment. The cure was worse than the disease. Talk to a qualified elder law attorney before you change anything about how your home is titled. Do that before you file a single form. Number 4, Georgia. Georgia is one of the most popular retirement destinations in the Southeast, and for good reason. The state excludes up to $65,000 of retirement income from state taxes for residents 62 and older. That's generous. But the property tax side tells a different story. Georgia's counties each set their own millage rates, and in fast-growing counties like Gwinnett, Forsyth, and Cobb, assessed values have been climbing 8 to 12% a year. A home purchased for $280,000 in 2018 might now be assessed at $410,000. The property tax bill on that reassessment can jump by $1,600 or more in a single year. Georgia offers a standard homestead exemption, but many counties also offer enhanced exemptions for residents over 65 with household incomes below $10,000 in non-retirement income. That threshold catches a lot of retirees off guard. It means Social Security and retirement income don't count toward the limit for certain local exemptions. In Gwinnett County specifically, the senior school tax exemption eliminates the school district portion of your property tax entirely if you are 65 or older. That can save $2,200 a year on a median-priced home. The application is filed with your county tax commissioner's office. In most Georgia counties, the deadline is April 1st. A retiree in Gwinnett County who fails to file the exemption application overpays by approximately $2,200 every single year. Over a 15-year retirement, that is $33,000. That is not a rounding error. That is a used car. That is 2 years of Medicare Part B premiums. That is money your children will never inherit because the county kept it and never said a word. So let me pull all of this together with a checklist you can work through this weekend. Not next month. This weekend. 1. Look up your county assessor or appraisal district website. This takes 4 minutes. Search your county name plus property tax exemption seniors. Every state we cover today, Illinois, Texas, New Jersey, Georgia, has this information online and free. 2. Check whether you have filed for every exemption you qualify for. Specifically, search for the Senior Homestead Exemption, the Over-65 Freeze, and any school district exemptions. This takes about 10 minutes of reading. 3. Download and complete the application. In Illinois, that's PTAX-324 and PTAX-340. In Texas, it's the Over-65 Homestead Exemption application from your appraisal district. In New Jersey, apply for both the Senior Freeze and Anchor through the Division of Taxation. In Georgia, contact your county tax commissioner. Filing takes 15 minutes or less. 4. Pull up IRS Publication 554 at irs.gov. Confirm that your tax preparer is applying the additional standard deduction for filers over 65. If you file your own taxes, check line 12 of your most recent 1040. This takes 5 minutes. 5. Before you move, retitle, or transfer your home, consult an elder law attorney. Not a general attorney, not your nephew who passed the bar, an elder law attorney who handles Medicaid planning and property tax implications. One 30-minute consultation can save you from a reassessment that wipes out every exemption you just filed for. Here's the truth nobody wants to say out loud. The money was always yours. The programs were always there. The only thing missing was a system that respected you enough to tell you. If this video helped you see something you didn't know you were missing, hit the like button. That one click tells the algorithm to show this to other retirees who need it. Subscribe and tap the bell so you don't miss the next one. I release a new video every week on exactly this kind of hidden retirement issue. Share this video with a parent, an aunt, an uncle, or a neighbor who owns their home and is over 60. They will not find this on their own. Drop a comment below and tell me, what state are you in? And have you checked whether you're getting every property tax exemption you qualify for? I read every single comment, and the answers help me decide what to cover next. Next week, I'm breaking down the 5 Medicare enrollment mistakes that cost retirees over $8,400 in lifetime penalties. And number 3 is the one almost everyone gets wrong. I'll see you then.